If price opens out of yesterday's value and then comes back in and gets accepted, there's a very high chance that it traverses all the way to the other side of value. This is known as the 80% rule or the Dalton rule, and it's what we're going to talk about in this video today. So this idea comes from James Dalton, who is a professional trader and market analyst, and he had a lot to do with market profile. Now, the 80% rule comes from Dalton's observations of the market using market profile and auction market theory. Dalton observed that if we open outside of previous day's values, so say this is the value area high and this is the value area low, excuse my terrible drawing, if we open on either side of the previous day's value, and what do I mean by previous day's value? I mean the previous regular trading hours sessions value levels. If we open outside of that, open meaning open at 9:30, because that's when the New York market opens, if we come back inside of value and accept inside of value, we'll talk a bit later about what this might look like, then there is roughly an 80% probability that we will cross all the way to the opposite side of value. In this case, that would be value area low. And I used this rule last week on stream to outline why I expected the previous day's value area high to be hit. So let's go over the rules that you can use just kind of like a checklist to tell if the Dalton rule is in play today for the market you are trading. Rule number one is, where have we opened? We need to open clearly outside of value of the previous day. We don't want to be just one or two ticks like, oh, okay, we're just above it. We want to be clearly beyond the value of yesterday's session. And one thing to note about where we open is the further away we actually open from value, if we are able to get back to the previous day's value, then the likelihood that we cross the entire range of that previous day's value is even higher. But all of that obviously implies that we come back inside of the previous day's value and accept that previous day's value. Now, what does acceptance look like? Dalton, originally using market profile, used TPO charts, which are time-based charts. So for Dalton's strict 80% rule, you want to see two 15-minute TPO prints inside of the previous day's value for the rule to be in play. This isn't very realistic, at least for me. In the markets that I trade, I only really trade for an hour and a half at most for the New York AM session. So there is slightly different ways that we can look at this, especially coming from a volume profile perspective. We want to look for things like the developing profile of the current session moving back into the previous regular trading hours session's value levels. So if this is a volume profile chart here, and this is the previous day's value area low in this case, we want to see price come up into this level, and when we come up into this area, we want to see more volume develop in this area. The higher up into it, the better, because obviously that's clearer acceptance. And then ideally, we'll get a developing point of control shift up into this previous value area. That is one way that we can look for acceptance. Another way would be seeing simply the bars come up into it. You would want to see multiple candles close in this area, either 1 or 5 minute, whatever time frame, it doesn't really matter. Obviously, you could use something like a 1 minute chart, you could use something like a 5 minute chart, but you have to take into account that if you're going to look for a lower time frame chart to give you acceptance, then the likelihood that that is true acceptance is obviously lower, because you're requiring less to say that it has accepted the previous day's value. So the way that people look for acceptance does differ person to person. Personally, I look for the mixture of those two things. I want to see the developing profile come up into the value area or down into it if we flip it upside down. And in doing that, we will most of the time print about 15 to 20 minutes of price action inside the previous day's value anyway. So those two things kind of align together. So that's the criteria of what we're actually looking for the Dalton rule to be in play. But how does it actually help us? So what you should use the Dalton rule for is context. You should not be just blindly entering trades as soon as you see acceptance of the previous day's value area and then target the other side. That is not how you're going to use this. You're using it as context to frame your trading ideas for the day. So almost think of it as like a bias for the day. If I see the Dalton rule is in play, then I'm going to align my trades to be in line with the Dalton rule, because statistically, that is my best chance. And it could also mean that I might hold a runner for the previous day's value area high if we come up from the previous day's value area low. Obviously, you could get a day where we come back up into the previous day's value area low, and you have determined that the Dalton rule is in play, that you are able to catch along from previous day's value area low and hold it all the way through until we get to previous day's value area high. But do not expect to do that every time. This is a very, very solid setup if it does happen to offer it to you, but don't be expecting that you're going to be able to do this every time the Dalton rule is in play for that day. Now, just a few things to consider if you are going to start implementing the Dalton rule is that it is definitely noteworthy that on strong trend days, like major news-driven days, like your CPIs, NFPs, PPI days, FOMC days, days with a really strong news driver, basically, that are going to be very one-directional, the Dalton rule is going to be much less likely to apply to those days. Obviously, it can happen, but as a rule of thumb, I would avoid trying to apply the Dalton rule to those specific trade days. So I hope I was able to cover everything about the 80% rule or the Dalton rule, and now you know what it is and how to use it in your trading. Just remember that this is not a strategy. This is a framework, a context to build your trades around and hopefully add some percentage points to your win rate. If you have any questions, feel free to leave them in the comment section below, and make sure you subscribe so you don't miss the streams where I talk about these sort of things every day. But that is all I've got for you boys in this video. I hope you enjoyed and you learned something, and I will wish you good luck, good trading. Catch you later, boys.